All right, let's jump right in. When someone says precious metals, what's the first thing that pops into your head? For most of us, it's that one classic, shiny element, the king, the gold standard, literally.
Right? Gold. We all know it. It's been the star of the show for, well, centuries. It's the go-to safe haven asset when things get a little shaky. But here's the thing. That's just not the whole story.
Because you see, beyond gold, there's this whole other world. We're talking about a trio of metals: silver, platinum, and palladium. And they're becoming really popular with investors who are looking to, build a more robust and diversified portfolio.
So let's get to know them, shall we? Think of each one as having its own unique personality, its own set of risks, its own reasons it might grow, and a very specific job it can do for you. First up is the one you're probably most familiar with. Silver is just fascinating. It's kind of got this double life going on. On one side, it's a classic investment. You've seen the coins, the bars, the jewelry. But on the other side, it's a workhorse. It's an absolutely critical piece of so many industries. We're talking electronics, medical tech, even solar panels. And that dual demand, that's the secret sauce to understanding its value. And this chart here really breaks down the pros and cons. Look, on the one hand, yeah, silver's price can be a bit of a roller coaster. It's more volatile, and it's not always as easy to sell off in a pinch compared to gold. But, and this is a big but, its growth drivers are incredibly strong. As industries need more silver and supply gets tighter, well, you can see how its value could really take off. That's what gives it that unique dual purpose. And the expert, Eric Kroc, he just nails it right here. With silver, you're getting that traditional protection against inflation. But at the same time, you're getting a piece of the action in industrial growth. It's a pretty powerful 1-2 punch. Okay, next up, platinum. Now, this stuff is way rarer than gold or silver, and that rarity is a huge part of what makes it so valuable. Sure, it makes for beautiful jewelry, but its most important job? It's in the auto industry. Platinum is absolutely essential for making the catalytic converters that cut down on harmful emissions from our cars. Now, if you look at its risk profile, you'll see platinum is also pretty volatile. A big reason for that is where it comes from. The supply is super concentrated in just a few places, mainly South Africa, but its growth is tied directly to industrial demand and stricter emissions laws, and that's what gives it this interesting potential role as a stabilizer in your portfolio. Eric Kroc calls it a promising under-the-radar asset, and that makes a lot of sense. Because of its long-term outlook and its role in the shift to cleaner energy, it could actually bring some balance to a portfolio, even if its price swings around in the short term. And last but not least in our trio, we have palladium. This is the rarest of the three we're talking about today. And just like platinum, it's a huge deal for catalytic converters. But palladium has a special trick up its sleeve. It's lighter and it can handle higher temperatures, which makes it incredibly valuable for certain types of vehicles. Okay, so palladium is a totally different animal. Its value is super dependent on what's happening in the auto industry. That means it's really sensitive to things like geopolitical issues or manufacturing slowdowns. It's also the hardest of the three to buy and sell quickly. All of this points to one thing. This is a short-term, high-risk kind of play. As Kroc says, its low liquidity and ultra-volatile price action mean it's probably not for the faint of heart. This is for traders who can handle some seriously wild swings and are looking to capitalize on those big price spikes, not for someone looking for long-term, steady stability. All right, so now you've met the metals. But the next big question is, how do you actually own them? It's not just one size fits all. You've got a whole toolbox of options to choose from. So at a high level, your choices really fall into two big buckets. You can go the digital route and own them through the financial markets, or you can go old school and own them physically, like actually hold them in your hands. Let's dig into the digital side first. So on the digital side, you've got a few different tools. You could get a basket fund, something like GLTR, which gives you a little piece of several metals all at once. Or you could use an ETF like SLV to focus just on, say, silver. Then you have futures contracts, which are basically high-risk, high-reward bets on future prices. And finally, you can buy stock in the mining companies themselves, which, believe it or not, can be even more volatile than the metals. Now, for the physical options, things are a bit more direct. You can buy bullion, that's just the official term for bars and coins, or you can buy high-quality jewelry. The big thing to remember here, though, is that when you own something physically, you're responsible for it. You got to think about where to store it securely, and you definitely need to get it insured. So we've covered the what and the how, but now we get to the most important question of all, the why. Why are you doing this in the first place?
Your personal goals should be the compass that guides every single decision you make. And really, it usually comes down to one of two paths. The first is diversification. This is the long game. You're using these metals to protect against inflation and to smooth out the bumps in your portfolio over time. The second path, that's chasing short-term gains. It's a much riskier, more advanced strategy for people who really know what they're doing and have the funds to back it up. So, for those of you on that diversification path, how much is enough? Well, the general advice from experts is to keep it modest. Think about a 3 to 5% slice of your total portfolio. That's usually enough to act as that inflation hedge we've been talking about, without taking on too much risk. And this quote from Eric Kroc just sums up that whole strategy perfectly. He calls them a non-correlation trio. That's a fancy way of saying they tend to zig when your stocks and bonds zag. They provide balance when other parts of your portfolio might be having a tough time. They're a complement to a traditional portfolio, not a replacement. Okay, so we've gone through the metals, the different ways to own them, and the mindsets behind investing in them. Let's wrap this all up with the final takeaway. So silver, platinum, and palladium, they really do offer some unique opportunities that you just don't get with gold. They can be tied to industrial progress, act as stabilizers, or even be tools for high-risk trades. The secret is to understand what makes each one tick and match it up with your own financial goals. So the real question isn't just about the metals, it's about you. Knowing what you know now, what role could they play in your story?